Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702.
You're listening to the best of The Money Show.
The Money Show.
Welcome to the best bits of The Money Show, a digest of some of the most important insights, thoughts and comments from The Money Show over the previous week. You might find that some of it's very relevant to someone you know. Might be a good idea to share the podcast with them. And also, of course, you can go to your favorite podcast app and simply search for The Money Show. You might find that some people really do benefit from some of our content and are not aware of it. So we'd really appreciate it if you did pass that on. To start some of the big news stories from this week, and David Mabuza, our former deputy president, passing away at the age of 64. He was deputy president from 2018 until 2023, and also, of course, premier of Mpumalanga. But a fascinating, interesting, complicated role in our politics, best remembered, I suspect, for his role at Nasrec, the ANC conference in 2017, in which he threw his support behind President Cyril Ramaphosa. Our history might have been very different otherwise. The US President Donald Trump, his big, beautiful bill going through and seems to be pretty much on its way to becoming law, does mean that the US debt will be a lot higher, that having an impact on the rand in a good way for us this week. And then also inflation expectations dropping below 4% for the first time since 2021. Tonight we bring you a mixture of stories from the world of money from the week that has been. Zelda La Grange, former private secretary, personal assistant to Nelson Mandela. She's now an author and international speaker, reflecting on what was an unexpected career journey, beginning in Madiba's office, and over 2 years became his office manager, his aide-de-camp, co-founder of the Nelson Mandela Foundation. She shared some memories of her journey.
If I look at the 24-year-old that walked through the doors of the presidency, so naive, so unschooled and quite frankly very stupid. I couldn't imagine at that time that I would end up, going on a state visit with Madiba to places like Russia and China. Growing up so conservatively, and so it's a completely different life than the one that I had planned.
Did you know when you walked in? So, if I remember correctly, you were working in government as in a sort of personal assistant role, admin role, and then were asked to come into this particular building. Did you know then what this was going to be?
No, not at all, Stephen. I applied for a job in Madiba's first presidency, in Jane Naidu's office. And as you'll remember, he was the minister without portfolio in President Mandela's cabinet. Now, before I used to work at a department called State Expenditure. Can you imagine? There was once a department called State Expenditure. And this job in the union buildings in Jane Naidu's office was advertised, and it was closer to my parents' home where I lived at the time. And also it was advertised that I could spend 6 months of the year in Cape Town when Parliament is in session, and that was very attractive to me.
So how did you end up then working for the president?
So on the day of the interview, fate and circumstance played its role. I was there for the interview for Jane Naidu's office, and then the door flung open and this very flamboyant black lady entered, Mary Mrwetyana, and she was the president's private secretary at the time, and she just announced that she needed an assistant. And after the conclusion of the interview, they told me who she was, and they asked whether I would be prepared to work for her. And quite frankly, I was just interested in the logistics of this job. Was I going to be closer to my parents' home, and whether I could do sessional duty? Because if to anyone growing up in the northern part of South Africa, you think if you can spend 6 months of the year in Cape Town, you've made it in life.
It's so interesting. So so you suddenly find yourself in this position. You're with the presidency. You're doing all sorts of things. It must have been, unbelievably exciting, and it was an unbelievably exciting time to be a South African involved in doing those things.
Absolutely, but also I felt like an imposter. Stephen, remember, those are the days when you couldn't Google anything. You couldn't Google what happened in South Africa and what the liberation was all about. So, very, very unsavvy for the position, not having, the skill or the knowledge. I had wonderful colleagues that worked with me that helped me, through this transition period and just made me feel at home. So it was a very exciting time, of course, with all the things. We've just celebrated 30 years since that day on Ellis Park in the 1995 Rugby World Cup. So a lot of excitement happening, but at the same time also very overwhelming to me personally as a human being.
So you worked with Madiba after the presidency as well, and there were times, I think, it was probably, I'm sure, a little easier than being in the presidency. And yet there were times when he was called upon. There were times, I've read some of the accounts of, conversations he had with ANC NECs about HIV, for example. He was still very much involved in our politics. People still looked to him for guidance.
Yes, that's right. The pressure for me was more after his retirement. As you remember, when a president retires, you can choose one person from your public office to work with you in retirement. And our entire infrastructure really collapsed overnight. So we lost our protocol office, our media office, people who were concerned with logistics, advisors, and so on. So it was just Madiba and myself that started this post-presidential office, of course, with the help of Professor Jakes Gerwel. But it was a very, very difficult time, that kind of stress and the pressure that you are under, because the world thinks now Nelson Mandela is time for everyone and everything. So, it was really hard to try and manage that.
And also the launch of the Nelson Mandela Foundation and things like that, which, still play a moral role, had a bit of a difficult time recently, seems to be recovering from what I can see. That became very important to him and a big, big part of his life.
Yes, absolutely. Also, it homed the schools and clinics project. As you remember, Madiba would call business people, and there was a joke going around that if you get a call from Zelda asking or inviting you for breakfast with Nelson Mandela, it will turn out to be the most expensive breakfast of your life. He convinced big business to build schools and clinics in rural South Africa. So that was initially, it was the post-presidential office, but it also homed these projects, these ad hoc projects that Madiba started.
So I want to talk a little bit about you after all of that, because, and I remember so clearly when he passed on in 2013 and things would have changed and you would have changed too. You would have grown over the years, and you had to sort of make a life for yourself after that. And that must have been quite tough. You'd been working for one person and such a person for such a long time. You must have thought to yourself, I'm not sure what I'm going to do now. Or was there a more gradual process to it?
No, you're absolutely right, Stephen. Yes, it was quite an awakening. I'm very fortunate that 6 months after Madiba's passing, I published my book, Good Morning, Mr. Mandela. And I've been on the speaking circuit since 2010. So, that's the one tagged on the other, and the speaking career became my main focus. But you have to reinvent yourself all the time. You'll know as a public speaker as well, there's always a need for something new and a new angle and so on. So last year, November, I published my second book, What Nelson Mandela Taught Me, and hopefully making the lessons that I've learned from Madiba more relevant. So, I think it's going to be very difficult. I'm also at the age now where no one will employ me really. But you have to do, find things to do and find purpose in life. So I do so through a combination of my charitable work. I'm a trustee of the Ahmed Kathrada Foundation. I help with 67 blankets for Nelson Mandela Day where I can. I'm also a trustee of the AMICORP Foundation. So, all that adds up, and then you find that I find myself sometimes I'm busier than ever.
No, I know what you mean. It's feast and famine as well. You talk on your website about reducing polarization, and I'm sure your talks are around that. And I found that really interesting considering where we are now, the Trump administration and all the rest. It seems to me the world is suddenly, call it, let's say 2022 or so, growing more polarized than I ever thought it would be again.
Yes, it's a big focus of what I do at the moment, Stephen. I do feel, that what we can learn from Nelson Mandela is that he surrounded himself by divergent opinions all the time. Even people whom he not necessarily ideologically agreed with always. And, in this time where we live, we simply cannot shut each other down because we differ from one another. It's very important for me that that people are reminded what a good listener Nelson Mandela was. He listened to really understand even his opponents and his enemy really. Understanding or listening to understand rather than listening to respond. And with social media and instant gratification, that almost becomes impossible today. So for me, there's so much more that we can still learn from Madiba's legacy in small lessons like this. And it helps sometimes just to be reminded of certain instances where he showed true leadership to help us cope with the world in which we live.
This is a terrible, terrible question. When you speak to people about reducing polarization, do you think people actually want to do that? It sometimes feels to me that actually there's a group of people now in very powerful positions who thrive on the polarization. They want to make it more and more polarized. They want to really turn us against each other.
No, absolutely. I agree with you, but there'll always be in every society, there'll be opportunists like that. And we can listen to them, but it's, we also need to learn what to pay attention to and what not, and what do you allow yourself to be, or to influence you, so what really do I take from what a person says seriously? So, for me, there's so much going on social media all the time, and people, spreading fake news and so on. But I always try and think of, there's a human being behind that who's trying to achieve something, and I try to focus on the human being and not be swayed by the populist remarks that people make.
That was Zelda La Grange, reflecting on her years alongside Nelson Mandela and her role.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Mrwetyana, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702.
You are listening to The Money Show's best bits.
Also this week on Personal Finance, financial advisor, co-founder of Galileo Capital, Warren Ingram, looking into the issue of unit trusts in today's investment landscape. He unpacked some of their advantages, looked at diversified portfolios, their professional management, but also some of the higher fees or potentially higher fees that are charged around unit trusts and the importance of understanding just what you've invested in.
So the thing about a unit trust is it's a group of us that almost definitely don't know each other. And what happens is we pool our money together. So we club together and we put our money in one very big, large pool. And with that pool, it gets administered by independent custodian. So it's not just, everyone puts it in Warren's bank account and we hope that he's going to do the bookkeeping. It goes into an independent custodian who says, okay, I'm going to keep record of each of you and how much each of you have put in. And then once that money is put together, it's then invested on behalf of all of the individual investors by a fund manager. And in the early days, that would be a fund manager who would say, I'm just going to buy shares on the Johannesburg Stock Exchange, as an example. Over time, what happened is that they started diversifying away from just shares on the stock exchange. They started buying bonds. They started buying cash, creating money market unit trusts. So over this last 60 years, they've actually created many hundreds of different kinds of unit trusts so that you can do everything from buy a generic money market account right up to a global fund that invests in shares. And then there is the original kind of one answer to all questions, which is the balanced unit trust. And most of us, if we invest in a retirement annuity, the likelihood is we own at least one, if not a few of those balanced unit trusts. The important thing always about a unit trust is no one owns the assets of a unit trust except the actual investors. So if I were to launch, the Money Show unit trust tomorrow, and let's say it didn't work out in a year's time, it wouldn't matter that the Money Show went bankrupt. That's never going to happen, Stephen. But let's just say it did. It wouldn't matter because the investors would still be safe. They would still have all the money. They would be the owners of the fund, and then they would get paid out the money in that fund. So the benefit of a unit trust is it's very well regulated, independently administered by a custodian, and then a fund manager who manages the money according to a particular mandate or a benchmark or an agreed kind of objective for the fund. So I think that's maybe the reason that they've been around for so long, is we've never seen in South Africa's history a situation where a crook has managed to take over a unit trust and steal all the money out of a fund. We've seen, I think it going way back to the Fidentia days where someone tried to do that, but it wasn't possible. And so I think that's probably a key for investors. It's transparent and something that we know is at least safe from fraud, if not bad decisions, which will always be a risk with investing.
Okay, so that makes a lot of sense. There's a sort of pizza analogy to this, isn't there?
Yeah, so if you want to kind of get to the point of having a bit more variety in your life and you can't afford to buy a massive pizza, what you can do is ask your friends to kind of club in together, and then collectively you buy one very big pizza with a whole lot of different ingredients on it, and then you can take a slice. And if you say, look, I'm happy to pay for half of the pizza, then you get half of the number of slices. Whereas perhaps if it's the end of the month money and you haven't been that good with your budgeting, maybe you're going to take a tiny slice. But the benefit there is that you get an allocation of a whole lot of different ingredients, and you get to taste at least a very nice slice of pizza. But it doesn't mean that you're prohibited from eating it because you have no money to buy the big one. You can club in with your friends and at least get a share. And to me, I like that as an analogy for us in the when we're looking at unit trusts, is we can't afford, for example, to buy every single share on the JSE, plus every single share globally, plus a collection of bonds and property companies and cash, and put that together in a portfolio for ourselves. We just wouldn't have enough money. But if there are a bunch of us putting all of that money together, then we can do that, and we get a lot more optionality around our investments, a lot more spread, and it's something that a small investor can participate in a very nice big portfolio alongside a bigger investor, and maybe tens of thousands of investors between the small and the large, and a whole variety in between. So it gives us a lot of variety and a lot of choice, and doing it on our own terms, because the nice thing about a unit trust is you buy in when you want to and you exit when you want to. You're not stuck in there for a period of time in a contract or some kind of a terrible marriage where you're locked in for life. You can always sell out of a unit trust. They trade every single day of the week.
And then the key players, it's quite a small number, which must be attractive too.
I think so. I think, understanding that it gets a bit technical, which we don't need to get into, but essentially you've got a fund manager and typically their name will be on the box. So it will be XYZ fund managers, and it will be their equity fund or their balanced fund or their cautious fund. And what they have is the right to manage that money according to what they've promised you. So they're going to set the objectives of the fund, and those objectives are strictly controlled by regulators who will say, if you're going to invest in a fund that's called a general equity fund, it means you have to buy shares only. You may not buy shares, bonds, property, and maybe half of the fund in cash. That's not called a general equity fund. So the fund manager gets an agreed mandate, and that fund manager then does their very best to buy the shares that they believe in, and particularly ones that they think will give you long-term growth, faster than the index. What is important there is that it's not the fund manager's asset. So if that fund is worth 10 billion rand, the only people that own the 10 billion rand are the investors. So that would be all of us as individuals that have bought into that fund. And then separate from the fund manager and separate from the investors will then be an administration company that will take responsibility for keeping all the records, or basically the bookkeeping of the fund, and making sure that they know who owns what and who's entitled to what, and also then a custodian who looks after the assets to make sure that if the fund manager goes bankrupt, that the assets are still preserved, and that between the custodian and the administration company, they know who needs to get paid back. So there's that separation of responsibilities and very clear separation of who owns the assets and who has the right to manage those assets and charge a fee. And the interesting thing about unit trusts is that they really became popular a long time ago because they were so very transparent with the way that they charged and what they were buying on behalf of investors. And that wasn't the case when we go back to the 60s. Money was generally controlled by insurance companies. They would put the money in big, very, very big pools, and you would just know that you're an investor in a pool of money, but you'd have no idea really what was inside that pool. You would have no idea what was actually being charged and what was being bought and sold on a monthly or quarterly basis. You would just get these vague reports every 6 months or every year, and you would hope that they would be right. So that's the other point about these, is that the administration company provides that transparency.
It does seem to be a real leap above. You can see why they're so popular. All right, different types of unit trusts that are available. Let's start with equity funds.
So just, unfortunately, my industry is full of jargon. So equity basically means shares, and you get a range of unit trusts that exclusively invest in shares. So the kind of original one would be general equity, and what that means is that it can buy shares across any of the sectors on the Johannesburg Stock Exchange. So whether it's mining shares, industrial, technology, pharmaceuticals, etc. And so it's got a broad mandate, and typically you'll find those will have quite a bias to larger companies on the JSE, just because they are the ones that are most investable. And nowadays you also get a global equity fund. So it just means that you can access a fund that buys shares on stock exchanges around the world. Then it does get a bit more specific. So you can get a fund, for example, that only invests in financial services companies, or only invests in mining houses or industrial businesses, etc. And globally, there are many more industrial sectors around the world. So you can, for example, buy a company that only invests in tech shares, or only invests in biotech or pharmaceuticals, etc. So a bit more variety overseas. Then you get bond funds, and typically those are funds that own a selection of government bonds and corporate bonds, and then maybe a variety of things called inflation-linked bonds and short-term money market instruments. So the idea there is that you're getting exposure to a broad bond market without being locked into only one bond. Then I think one that's probably familiar to a lot of us would be a money market unit trust, which is really a place where you store cash to earn the greatest or the highest rate of interest that you can for a short period of time. And hopefully it's a parking vehicle for you to do something with that money. It's certainly not a place you should be storing your investment money for long periods of time. Then the Swiss Army knife of unit trusts is the balanced fund. So that's a fund that will give you an allocation to cash, bonds, property, shares. Typically, if it's a balanced fund, it's got a bigger exposure to shares. And 45% of balanced funds can be invested internationally. So it gives you a huge amount of exposure to all different kinds of assets in South Africa and all around the world. So it's probably the one, as I mentioned, that we would own in our retirement funds, most of us. Then lastly, you get more and more of these very narrow speciality funds where you can buy a fund that only invests in commercial property, or only invests in industrial buildings, or gold, for example. Very, very popular a few years ago was just a gold fund. And globally, especially, there are funds that will invest in according to values or religion. So you get Sharia funds, you get ethical funds that avoid tobacco and alcohol and those kinds of things, the sin stocks. So you do get very, very specialized unit trusts as well.
It was Warren Ingram sharing his insights into the interesting, durable, and still evolving role of unit trusts in today's investment landscape.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Mrwetyana and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The best of the Money Show
on 702.
702.
A really important conversation with the shapeshifter, Gerrie Fourie, the CEO of Capitec Bank this week, reflecting on his 11-year journey, but also on what happened before that and some interesting comments about his family and the role they've played in guiding him to where he is. He's also spoken a little bit about his future.
Thanks, Stephen. Yeah, it's a funny feeling to be called the outgoing. I think I prefer to be in the seat. But yeah, it's a call I made, and yeah, I'm quite happy with that call.
No, I'm sure. I hope you don't mind, but I've often noticed that sometimes if you look at someone's names, it's the middle name that carries a lot of the history. And I discovered today that your middle name is not a name I've come across before, Mrwetyana. And I wondered if there was a little bit of history, if it was just a name your parents decided upon when you were born.
No, it's my granddad comes from Netherlands, and he was a Mrwetyana, he was a builder. And he moved to South Africa in 1940. And so the two of us had a very strong bond. And that's why my real name is Gerardus Mrwetyana, which is actually his name and his surname. So, yeah, it's a bit of history. A building company in Netherlands, it's in Haarlem. It's probably now about 120 years old.
Sure, that's amazing. There's a sense of real history in your family then. I mean, strong connections that go back a long way.
Yeah, I was very privileged to go to the business probably about 10 years ago, and they've got a little bit of a museum there, and I actually spent about 4 or 5 hours to go through their financial statements from, I think they started in 1903, so I could see how they performed through the First World War, Second World War, so it was quite amazing to experience it.
So the family that you were growing up in clearly quite a close one. Where were you growing up? Was it? I thought it might be the Western Cape.
No. I grew up in the Free State. I was actually my first 6-7 years I spent in Wepener, which is East Free State, and then my parents moved to Bloem, and basically weekends I was on the farm at Wepener. And I was in Bloem until I was about 20 years old, did my military service there. And then when I was 21, 1984, I came to Stellenbosch and I studied here.
Was maths, I mean, often people who do what you do had a strong aptitude for maths at a young age, and also a strong sense of education. Not always, sometimes they came across it later. How was it for you? Was maths always something that you knew what you were doing in, something that you felt you were strong at?
That's actually, I think that's where our whole education system gets wrong a little bit. I was not a very good student at school. I was more doing sport and a variety of sports and things, cricket, rugby, etc., etc. So studying and maths and these things came second. And it's actually when I started with my BCom accounting that I think in my first year, second year, that I really got serious. And then decided I was actually this is what I want to do, and then really went for it. So yeah, I think a lot of people, as when they're at school, they're still too uncertain what they're going to do and what is important for them. So I think in matric I got a C. So yeah, I wasn't a good student, but I was a good student when I went to varsity.
Yeah, I know plenty of people like that. So you finished your BCom accounting. Did you already have direction by then? Were you already thinking banking is the way that you were interested in?
My thinking, and I said it, my whole thinking was I wanted to be an entrepreneur. So I wanted to build my own business. I didn't want to work for a salary. And that was my passion. But I decided I still need to first go and learn. So I worked for Arthur Anderson for about 9 months. And then I went to Stellenbosch Farmers Winery that now is part of the Stel. And I went straight to the financial planning division where I started working with the budgeting of the company. And then I was lucky. I was 27 and Frans Strubel, our CEO, said to me, go and run KwaZulu-Natal. So at a very young age, I ran KwaZulu-Natal from A to Z. And at 32, he said to me, go and run the old Transvaal, which is now Limpopo, Mpumalanga, Gauteng. And then at 37, Michiel contacted me and said, do you want to come and start a bank and be an entrepreneur? And yeah, I took the opportunity because that was my passion. So, I said to a lot of people, what I've done in the last 25 years is live my passion, eat, drink, building, and being an entrepreneur.
Did you know, Michiel, you're talking about Michiel Roux, I presume, the founder of Capitec in a way. Did you know him before? I mean, did he just phone out of the blue? Had you come across each other before?
Carl Fisher, that was our exec for marketing, knew Michiel well. And Carl said to Michiel, you must contact me. And then he got hold of me, and we had our first discussion in Joburg, and then a couple of conversations before I decided to say yes. So, yeah, I didn't know him well, or I knew about Michiel, but I never met him in person. But yeah, I think incredible person, a lot of integrity. I've got a lot of respect for Michiel.
What was it about him? What was it about the project that really made you so enthusiastic? Obviously, the chance to start something, be at the start of something. I mean, I've been lucky enough once or twice to be at the start of things, and there's really nothing like it.
Yeah, I think it's just the opportunity because, I knew nothing about banking. We were in liquor. He himself was coming out of liquor, but he was at Boland Bank. At that stage, Rian and Carl hasn't joined yet. That happened about 3-4 months later. But it was just the excitement of, I looked at the opportunity, had discussions with Rian, with Carl, with Michiel, and then you had the PSG backing, and PSG was at that stage also just really starting to go. So I think it was the excitement and really the opportunity to build something from scratch, which, like I said, that was my passion. It was really for me important to live my passion.
At the time, and of course there's a book about this that I don't know if you've read or think anything of, but I mean, banking was quite staid, it was quite boring, it was quite easy. Capitec and the people behind Capitec were really coming and shaking things up, and it's easy to look back now and say, oh, you were always going to win, you knew what you were doing and all the rest. Often it doesn't feel like that at the time. There must have been times when you felt very differently about it.
Yeah, it's interesting. If I look back, I think we were a little bit crazy because, we want to build a bank with very little capital, and you want to take on the big four, and you want to do something different. But I think what inspired us was that we believed, we came with our fundamentals of affordability, accessibility, simplicity, and service. And that was actually a summary of what we believed was wrong in the banking services and what banking was all about. I still don't understand why banks are open from 9 till 3:30 and why are they not open like a retailer, because they should be actually open before 8 and after 5, because that's the only time people have got off to actually go to the bank. So yeah, I think it's the thinking completely differently and do something with banking. I remember when we started, banking was still behind very thick glass, no personal interaction. The computer said no. So we just saw it as an opportunity to actually look at the industry and come up with something completely new and different. I think one of the first things we said is everyone will get exactly the same price. So there's not a different pricing or products depending on your income. So only one product for everyone. Everyone will get exactly the same pricing. We open up the branches, so we take all the security away. So it was thinking differently, and I think that actually made us successful in Capitec is we haven't reinvented something new. We've just taken existing things and think about it and really said, how can we do it completely different to the best interest of the client?
It's been amazing to me that none of the other banks, despite having resources, been in the market for a long time, have tried to take you on your model I mean, banking is changing and there are other models now coming in. I don't know how well they'll do. But I've always been slightly amazed that none of the people saw you coming, you know. I mean, it's a bit like New Zealand just not seeing the Springboks coming in the last 2 World Cups.
Yeah, I think, nobody gave us a chance. We had to build a brand, and you build a brand from scratch. And to build a brand, it all is about consistency, because that builds trust. And we knew it's going to take 12, 13 years to build a brand. And it was about 2012, 2013 where people said, not Capitec who, understanding Capitec. But then that whole perception was, we're the bank in the rural areas, or we're the bank for the lower income people, and not bank for all South Africans. Yet our business plan from day one was to bank 95% of South Africans. Our whole philosophy, our product, our positioning, everything we did was to bank 95% of South Africans. And, if I look at the top end or the high income, we've got now 15, 16% market share. So I think that's what they missed, is that we're not coming in for the low income or just rural, but we actually want to bank the full South Africa.
We've probably seen you during some of the sort of big moments. So we would have seen you during results presentations. You and I would have spoken then, but you would have spoken to my predecessor a lot. There would be moments when maybe you did media appearances for results and things like that. But behind that, I can't help but feel that there must have been just a huge amount of hard work. You would have been working very long hours, doing quite intense things for quite a long time that we would never see. Have I described that accurately?
Yeah, I think, if I look at our culture in Capitec, it's all about understanding the client and really trying to do things differently for the client. We've always said if we do something, we need to be 20%. We should differentiate 20% from our opposition. Then a very strong focus on people, very strong focus on team and making certain our people understand it, and then very strong delivery. And delivery is very simple. Everything that moves in Capitec we measure. But you're 100% right. It was long hours. It was a lot of pressure. We were the underdog, and still today, I was on the Exco on Monday, and it felt like there's so much to do and so much that we're not doing right. But I think that's the mentality of challenging yourself the whole time to do things better and do the best for your clients. So, yeah, it was definitely. And I think that's also why I've decided to retire, because after 25 years, very long hours, working weekends, working till late at night, somewhere you want to say, okay, I need a bit of me time.
Gerrie Fourie reflecting on more than a decade of leadership at Capitec Bank and how important he's found his role, how important Capitec Bank has become in our economy.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Mrwetyana, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702.
The best of the Money Show from this week.
Investment School this week, Dr. Musa Malwandla, the Co-Chief Investment Officer at Differential Capital, and Mbasa Mrwetyana, Deputy Head of Research at Mrwetyana Capital, unpacking the crucial role investment analysts play in deciding where to allocate money. They may give us some insights into the behind the scenes of financial decision making.
Yeah, I mean, analysts, what we really do is spend time doing research on the companies that we need to invest in. So we collect information, we analyze that information, and we kind of generate actionable insights. And in the end, we end up with some kind of recommendation, which is either a buy and a sell. So at the core of it, it's about that recommendation. And the backdrop of that is really then the analysis, which includes a financial model and all the insights that you will have collected. So It can come from the financial information that the company discloses, including an annual report. It can go to speaking to industry experts and also speaking to management teams and getting information.
Is it just numbers? I would like to think it's more than that. I mean, you might want to think, well, this company looks pretty good on AI and this company doesn't know what AI is. And so that's not about numbers, that's about something else.
Yes, exactly. So it's more than numbers. So there's a whole lot more work that goes in the more qualitative side of things and in generating that insight. So there's a whole lot of reading that you have to do, and the factors, some of the factors that you may consider, and the risks around the company. So if I can say, if you're trying to pick a company and you want to know what the company does, how it does what it does. So from a strategy perspective, what's the company's strategy, and what's the track record of the management team in executing that strategy, and in the end, try and utilize all of that information to generate some numerical number, which we call a evaluation.
Musa, you must really have to get, a lot more than skin deep in a company. You have to really get deep into the inner workings, and yet you don't work for it.
Yeah, I think that's true. So it's really complex in terms of the amount of data you usually have to sift through. So, in fact, in many cases, the starting point is the financials of the company, but where it ends and where it leads you is usually in forests of data. So you will look at, obviously the starting point in South Africa, you would go to Stats SA to figure out trends. You might look at sub-reports and data. But it really doesn't stop there. I mean, you might do channel calls. So in other words, figure out the pricing that a particular company is getting from its suppliers. What is it selling at? Those are the kinds of data insights that usually form that view you have on the company. And it really is, it's undefined in where it can lead you.
Mbasa, I have this idea in my head of someone sending a drone over Pick n Pay, Checkers and Spar and Woolworth stores to see how many cars there are in the parking lot. So someone's counting the delivery motorbikes at 5 to 8 in the morning before they open. Does it get to that level? Or have I just been watching Billions too much?
Too much Billions different, but there is a lot of channel checks that happens, as he mentioned. So, some of the things that I do when I walk into the store, I'll kind of look out for promotions, and also those are some of the indicators that will tell you whether the company is doing well or not. So if you're going to a Grootes, for example, and you see a lot of promotion in season, that would kind of give you a signal whether this company is likely to do well or not. Because if you're promoting a lot, in season, that's something that would be more negative for your pricing that comes through in the numbers.
Musa, what kind of person does it take to be a good analyst? You would need to know about more than just the company. You need to know a lot about what's happening around the company too.
Yeah, so that's true. So you need a lot of curiosity. I think that's a starting point. And obviously, financial numeracy. You should be very, very comfortable with the numbers, with building a financial model, so working your way through a spreadsheet. So all of those, take for granted that you need them. But there are a few other things. So, the way I think about it is usually it's not about getting the idea, but it's about living with it once it's in the fund. And I think that's, once you've invested money in it. And there, what it requires is fortitude, right? A strong stomach, because there will be days. The point is when you participate in markets, the cost of that is volatility, and you will get some things wrong. How do you live with those things? And sometimes it's not even about being wrong. It's about volatility for its own sake. The markets move up and down. How do you sleep on a day when a stock is down 5% and you've invested 5% of the fund in it? So those are the kinds of behavioral features that you need. And I would say a certain level of intellectual humility. So what I mean by that is you will be wrong. And when you're wrong, how do you learn from those and make better decisions next time? And what does it tell you about the other positions you have in the portfolio? And I say the last point is around the behavioral bias, that is a confirmation bias. So once you've invested in an idea, oftentimes you look for information that only confirms the idea and from a risk management perspective, it's actually a terrible thing to do, right? You want to look for information that could possibly invalidate the idea and therefore allow you to move out quicker. And unfortunately, most of us, that's a bias that we come inbuilt with. So there are several of these kinds of behavioral issues that you need to think about.
Mbasa, it's an interesting mix. Someone who's curious, humble, so that's a few of us out then. And then you also need to have fortitude. Lovely word. I mean, you need to be able to have some intellectual strength to have those things.
No, I mean, exactly. I mean, it goes a long way. So those are some of the things that you also build with your experience. So when you start in the industry, some of the tricks and trades you learn as you go. So one of the things, I never thought I would have to do is when you interview management, the skill of having to, ask someone questions and also write the information that you're getting so that you can use it later on. So that's something, those are some of the skills that you kind of build over time as and when you're working in the industry.
How important is it to know which questions to ask and to get them to answer them? I mean, I'm supposed to be able to do that professionally, and I sometimes come away frustrated. I mean, that must be one of the big things. You'll be asking someone who knows their company intimately. You're an outsider to it, and you have to get them to cough up the real details.
I mean, it's very important. You only get very little time, so you can get sometimes an hour with this management team, and you have to get the best insight. So that's why you spend more time reading and covering all the other stuff that you cannot get. You can get publicly, but the stuff that you cannot get, then you can speak to the management team. I mean, it's really about being prepared and making sure that you cover the points that matter, that are going to impact your investment thesis.
Musa, so when people are making these decisions, and a lot rests on these decisions, I mean, it's always other people's money, right? What kind of qualifications do people tend to have?
Yeah, so it's usually your CA, I mean, that's the standard one. So CA, CFA, so the Chartered Financial Analyst. Sometimes it's, your actuarial qualifications, economists, and increasingly these days it's your quants, so your mathematicians, statisticians. Those are, I would say, the base kinds of qualifications you start to see. It does differ by the style of the investment approach. So in other words, if you're a value manager, if you're a thematic investor, those will require different types of skills. So if you're a quant fund or investment house, you'll obviously require different sets of skills. So it does differ substantially across the various approaches.
Is there any space anywhere for people who maybe are historians or understand a society to kind of know which direction things are going? Or was it only really the hard maths?
It was interesting enough, historians, in fact, economic historians actually tend to make, great investors, particularly longer-term investors. So thinking about not just what's happening to a company, but to a whole macro environment. Is the U.S. going in decline now, and how will the transition happen between the U.S. and China? That's something that a historian might be able to solve. In fact, many of the great investors become great investors by studying the history. So I think, but again, it depends on the style, right? So if you're a quant investment house, obviously there's probably very little scope for that kind of skill set. But in many cases there are.
I'm reminded Ben Bernanke, a former chair of the U.S. Federal Reserve, did his doctoral thesis on the Great Depression. And I think at one point actually apologized on behalf of the Federal Reserve for the Depression. Mbasa, so if you have a group of analysts in a room and you're all looking at a company, does it help to have people with slightly diverse experiences or slightly diverse interests to make a better decision? Or would a fund rely on kind of one analyst per company?
No, I mean, it actually helps a lot to have those diverse views, because what you spoke about earlier, confirmation bias, that's one of the ways you can try and eliminate that. Because if you're an analyst, sometimes you can also look at a stock in a particular way because you've looked at it for a long time and kind of miss some things, whereas someone else that's speaking to you can kind of pick up something that you've missed and make a better decision. So diverse teams are actually very helpful.
And would you have, generally speaking, would you have one analyst covering a big company like a Capitec or a ShopRite or something like that? Or would you have, or would a firm or would a fund try and have more than one?
No, so an analyst gets allocated one stock and you would cover that stock. So you'd get a universe of stocks basically that you cover, but you'd obviously be the main party that is responsible for those stocks, and then you go back and speak to your colleagues about it. So usually we sit in investment committee meetings where we debate some of these ideas. So whatever view I have on Capitec or Mr. Price, I'll come and put it on the table, and the team will hear my view and also obviously debate any pointers that I might not have covered.
That was Dr. Musa Malwandla, the Co-Chief Investment Officer of Differential Capital, and Mbasa Mrwetyana, Deputy Head of Research at Mazi Capital, sharing valuable insights on the role of investment analysts in fund allocation and the financial decision-making during investment school this week. You've been listening to the best bits of The Money Show, a digest of just some of the best conversations from the show this week. If you'd like to hear more, please go to our website or your favorite podcast app and search for The Money Show. Thanks so much for being with us this week. We'll be back with you again at 6 o'clock on Monday. Have a good weekend.